This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Hello, listeners, and welcome to our deep dive session on the psychology of trading. This is where we move beyond the charts and indicators to discuss the most complex component of any trading system, the human mind. I want you to transport yourself to a specific moment, a moment you have likely experienced many times. You've done your research, you've analyzed the charts for hours, you see a pattern, a setup that feels perfect. Your heart rate quickens just a bit. You position your mouse over the buy button, the world seems to slow down. In that single suspended moment, you feel a surge of agency, a profound sense of control. You click the button, the order is filled, and for that 1 second, you feel like you've just steered the market. And then, the market does what it does. Perhaps it moves against you, stopping you out for a loss. The feeling of power evaporates, replaced with frustration, confusion, or even anger. This cycle, this intense feeling of being in command, followed by the harsh reminder that we are not, is the very essence of today's topic, the illusion of control in trading. It is without a doubt one of the most dangerous and costly cognitive biases a trader can face. It's a silent account killer. It convinces us that our actions, our analysis, and our willpower can influence an environment that is, by its very nature, overwhelmingly random and probabilistic. In this episode, we're not just going to define this illusion, we are going to dissect it. We'll explore the deep psychological roots of why it feels so real, how it manifests as specific, destructive behaviors, and finally, present a concrete, actionable framework for dismantling it in your own trading. So, let's start with a foundational understanding. What is this illusion? Controlling the uncontrollable. At its core, the illusion of control is a well-documented cognitive bias where we overestimate our ability to influence events that we, in fact, have no control over. It's a psychological defense mechanism. The human brain craves order and predictability. The idea that the world, and specifically the market, is largely random and chaotic is terrifying. It creates cognitive dissonance. So, to protect ourselves from this anxiety, our brain invents a narrative of control. Think about everyday superstitions. When you're playing a board game, you might roll the dice softly when you need a low number or hard when you need a high one. You know it doesn't work, but it feels like it should. In trading, this might look like using a lucky mouse, or only trading at a specific time of day, or believing that the act of you watching the chart somehow keeps the price from falling. But in the market, this goes deeper. We believe our analysis is the control. We believe that because we drew a trend line, the price must respect it. The hard reality is that the financial markets are a vast, complex, adaptive system. Prices are moved by billions of dollars from algorithms in Frankfurt, a sudden policy change in Japan, a surprise earnings report from a tech giant, or a wave of fear from millions of retail traders just like you. Your single trade, your single analysis, is a grain of sand on an infinite beach. The illusion is believing your grain of sand can steer the tide. But if it's an illusion, why does it feel so profoundly real? This is the most critical question. The answer lies in the work of psychologist Ellen Langer, who, back in 1975, identified what she called skill cues. These are features of a chance-based activity that tricks our brain into thinking it's a skill-based one. Trading is full of them. Let's break down the 4 biggest skill cues in trading. Skill cue number 1, choice. The simple act of choosing gives us a powerful sense of control. You are not given a trade, you choose it. You choose which stock to follow, which currency pair to analyze. You choose your entry, your exit, your position size. This endless stream of choices creates a strong feeling of agency. Your brain equates, I am making many choices with, I am in control of the outcome. Skill cue number 2, involvement and effort. This is a huge one for diligent traders. You spend hours, maybe dozens of hours a week researching. You read news, you backtest systems, you stare at charts until your eyes blur. This creates a powerful sunk cost fallacy of effort. Your brain unconsciously argues, I have invested 10 hours of intense work into this trade idea. Therefore, my conclusion must be more accurate. My effort must translate into a higher chance of winning. The effort feels like skill, but the market doesn't care how long you researched. Skill cue number 3, familiarity and information. The more information we have, the more in control we feel, even if that information is just noise. In trading, this is our charts. We have streaming real-time data, 20 different indicators, news feeds, and expert analysis. This wealth of information feels like insight. We start to see patterns everywhere. This is called apophenia. We see a head and shoulders pattern and remember the last 2 times it worked while conveniently forgetting the 5 times it failed. This familiarity with patterns makes us feel we can predict the future, when in reality, we're just recognizing a familiar but still random formation. Skill cue number 4, competition. Trading is framed as a zero-sum game, a battle. It's you versus the market or you versus the smart money. This competitive frame automatically triggers a skill-based mindset. In a competition, you win through superior skill, right? By personifying Mr. Market as an opponent, we trick ourselves into believing we can outsmart it, as if it's a chess match. But the market isn't an opponent. It's an environment. You can't outsmart a hurricane. When you combine these 4 cues, choice, effort, information, and competition, you have a perfect storm for creating a powerful, convincing, and utterly false sense of control.
Now, let's move to how this illusion shapes destructive trader behavior. This false belief isn't just a harmless thought. It is the direct cause of the most common and destructive trading errors. It actively shapes our behavior. Let's look at the triggers and their devastating consequences. Trigger number 1, the dopamine rush of a winning streak. Nothing reinforces the illusion of control like a series of wins. When you win, your brain releases dopamine. It feels good. Your brain links the action, your trade, with the reward, the profit, and concludes, I did that. I am skilled. After 3, 4, or 5 wins in a row, you're not just confident, you feel invincible. You feel you've cracked the code or found the holy grail. Excessive leverage and risk. This is the invincibility phase. You think, I'm on a hot streak. I can't lose. I should trade bigger to maximize this. So you double your leverage. You increase your position size from 2% of your account to 10%. You have just turned the illusion of control into a weapon aimed directly at your own portfolio. Because this hot streak is statistically just a random cluster of wins, and the inevitable loss that follows will now be catastrophically large. Trigger number 2, the anxieties of randomness. The flip side is also true. When a trader doesn't have a system, the market's randomness creates intense anxiety. The need to do something to gain control becomes overwhelming. Overtrading. This is the trader who believes activity equals control. They can't just sit and wait for their high probability setup. They feel they need to feel out the market's pulse. So they scalp, making 30 or 40 small trades a day, convinced each tiny decision is a skilled one. They're constantly clicking, constantly engaged, constantly involved. They feel in control. But in reality, they are just paying a fortune in commissions and being chopped up by random noise. Trigger number 3, the curse of apophenia, seeing patterns. As we mentioned, our brains love patterns. We see a double top and we believe in it. System hopping. Here's what happens. A trader finds a system, let's say based on a moving average crossover. It works 3 times in a row. Illusion of control builds. Then it fails 4 times in a row, which is a normal part of its statistical performance. The trader's illusion is shattered. But instead of accepting the randomness, they conclude the system is broken. They discard it and go on a quest for a new holy grail, a new pattern, a new indicator. They are forever chasing the illusion, not building a robust, probabilistic model. Trigger number 4, the need to be right. This is an ego-driven trigger. The illusion of control is deeply tied to our self-worth. A winning trade means I am smart. A losing trade, therefore, means I am stupid. Attribution bias and widening stops. This is the most insidious consequence. When a trader wins, they attribute it 100% to their skill. My analysis of the support level was flawless. This is internal attribution. But when they lose, they blame external factors. The Fed chair made a surprise comment, or the market is manipulated. This is external attribution. This bias makes learning impossible. You never fix your flaws if you blame all losses on bad luck. Even worse, it causes traders to widen their stop losses. The trade goes against them, but their ego can't accept the loss. They think, I know I'm right, the market is just wrong. So they move their stop loss, giving the trade more room. They are letting the illusion of being right destroy their risk management, often leading to a single devastating loss. This isn't just theory. A 2003 study by Fenton O'Creevy studied 107 professional traders. The findings were undeniable. Traders who scored highest on psychological tests for the illusion of control had the worst real-world trading performance. They took poorer risks, managed their money badly, and contributed less profit. The illusion is literally measurable and costly. How to recognize and overcome it? The antidote. Okay, we've defined the problem and explored its dark consequences. Now let's talk about the solution. How do we fight an enemy that's part of our own brain? You don't fight it, you manage it. You build a system around it. You treat your own psychology as part of the trading plan. Here is a 5-step framework to serve as your antidote. Step 1, shift your goal from being right to being profitable. This is a mental shift. A profitable trader doesn't care about being right on any single trade. They care about the long-term mathematical expectation of their system. This means accepting losses as a simple, unemotional cost of doing business. You must internalize this. A loss is not a failure. It is a business expense. This simple reframing strips the ego out of the trade and deflates the illusion of control. Step 2, embrace probabilistic, not deterministic thinking. Stop thinking, this trade will be a winner. Start thinking, I have a system that, over the next 100 trades, has a 60% win rate. I do not know if this trade is one of the 60 or one of the 40. My only job is to execute it flawlessly. This is probabilistic thinking. It moves your focus from the outcome, which you can't control, to the process, which you can. Step 3, make your trading plan your rational boss. Your trading plan is the version of you that is smart, calm, and objective. It is written outside of market hours when you are free from the emotional pull of greed and fear. This plan must be non-negotiable. It must have objective, black and white rules for entry. If this and this happen, then I enter. Exit, loss. If the price hits X, I exit. No exceptions. Exit for profit. If the price hits Y, I take profit. Risk. I will not risk more than 1% of my account on this trade. When the market is open, your job is not to trade. Your job is to be an employee whose only task is to follow the boss's plan. Step 4, keep a psychological journal. This is your mirror. A standard trading journal tracks metrics. A psychological journal tracks you. After every trade, write down the answers to these questions. What was my reason for entering this trade? Was it in my plan? What was I feeling? Confident? Anxious? Bored? Greedy? Did I follow my plan 100%? If I didn't, why not? When you review this journal, you will see your illusion of control in plain writing. I took this trade because I just felt it would go up. That's the illusion. Seeing it on paper is the first step to starving it of its power. Step 5, define your actual control. Finally, you must constantly remind yourself of what you can control versus what you cannot. You cannot control the price. You cannot control a news event. You cannot control whether this trade is a winner or a loser. You can control your preparation and research. You can control your entry signal. You can control your stop-loss placement. You can control your position size. And you can control your own actions. Focus 100% of your mental energy on flawlessly executing these few things. This is the true skill of trading. So let's return to that moment at the precipice of a trade. The charts, the indicators, and the flashing numbers all pull at us, tempting us to believe that our one click can tame the future. The journey of a successful trader is not about learning to control the market. It is about the much harder and much more rewarding journey of learning to control ourselves. The market is, and always will be, an ocean of uncertainty. But we are not defenseless. We have our plan. We have our discipline. We have our risk management. These are our anchors in the storm. Forget about shaping the market's future. Focus on shaping your own habits. Focus on forging your discipline. Focus on building the resilience to take a loss without breaking your rules. That is the real victory. That is the only control you will ever need. If this episode gave you a new perspective, I encourage you to share it with another trader who might be struggling with these same psychological battles. And don't forget to subscribe, because our exploration of the trader's mind is far from over. Thank you for listening. See you in the next episode. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade